Hey everyone, welcome to the weekly review. This week I was away for most of the week and only came back on Friday, so didn't do a lot. But let's see what happened. And first thing was the Monday rally. Didn't really expect we would get it, but it was part of the plan. Like I said, if we get a VIX crush, and we did Monday, yeah, we go up. But the warning signs from VIX were valid, and after going down and making another higher low, we went up even higher. We closed bullish on Friday. We closed above 21, actually above 20, but like two back-to-back bullish closes for VIX. And it's not looking extraordinary for the market. Like I said, if we lose the Q4 open, we will go for the low. We didn't quite get it on Friday, but volume spike up. This drop needs a more of a capitulation move to end. Kind of got that in TLT. This is the highest volume ever for TLT, I believe. On the weekly, it looks very good. So this looks like a capitulation move for TLT, meaning margin calls have happened, someone got burned, and forced sellers. Like you, when you look at any ticker, it's not the volume spikes aren't when we go up, they are when we go down. And this is because of forced selling. Um when we talk about liquidity, liquidity doesn't mean volume. Liquidity is the balance between buyers and sellers. Meaning if if buyers are and sellers are equal in numbers, the price doesn't go anywhere. Like everyone, there is also always a buyer or a seller for any transaction. But the what makes price goes up is whether buyers or sellers are more greedy. Let's say when and if buyers and sellers are equally greedy, price doesn't really go anything and equal in numbers. But if there are more buyers or more sellers, then the other side asks for a premium. Like for example, if there are 10 people who want to buy at 100, take any stock, doesn't matter, uh, and there's only one seller, that seller might ask for 101. And at some point, one of the buyers will give in and say, okay, I'll buy it at 101. I don't want to wait anymore. And then the price jumps to 101. Uh, the same thing happens when we go down, but everyone wants to sell, and buyers want to get a better price. So liquidity actually means that there is a balance between buyers and sellers, and one side doesn't try to exploit the other one. We get this huge spikes in volume when we go down because everybody wants to sell, or there are forced sellers because they get margin called, or their stop loss trigger and stuff like that. And when this happens, uh, buyers want to get a better price. So let's say you have a stop loss at 55 with a market order, and then the stock hits 55, but you actually get filled at 54 because there was no buyer until we got to 54, and this makes the price goes even lower and lower. And I think we kind of got the capitulation move in TLT, and it happened at the FFR level basically. Let's look at 20-year. So 20-year high was 536. That's basically what the federal funds rate is at the moment, and I don't think we can go any higher in the 20-year than this level. Yields can go higher, but the 2030 should uninvert. So as you've seen probably, for example, let's take the 1 year. 1 year is basically moving at around this level, slightly above the FFR, between 5.4 and 5.5, let's say. And it hasn't moved even with yield spiking. You can ignore this, whatever. Or look at the 2 year, same kind of thing. It barely moves in this range. But the 10 year moved up a lot, the 20 year moved up a lot, and so on. So everything that is where it should be, like around the FFR plus a small premium for the short-term ones, stayed put, but the long-term ones moved higher. So what should happen if yields continue moving higher is the 30 year continues going up, but the 20 year should not pass like this I think 3.4 is the max you can reach. Like it's above the FFR slightly. There shouldn't be a big premium above the FFR for the 20 year. So if yields continue going higher, it will be through the 30 year going a bit higher and potentially uninverting. It has a lot of room until it uninverts compared to the 20 year. Like if it has to go to, let's say, 5.3, and it has upside of 4%. Uh, until the yields peak and stop going higher, equities will not bottom. And going back to equities, we kind of need a capitulation move in which buyers actually step in. And let's cut these things because we don't care anymore. I expanded the Q4 high because we made the previous one was this, like 447, now it's 448. Let's move the midpoint slightly higher as well, and the low stayed the same because the low was made last week, not this week. We didn't reach the low. Now, this is an ascending volume pattern, which means continuation. Like I said, VIX is above. 20 year and 40 year can still go a bit higher. So we're not out of the wood yet, and we kind of need a big ass red day to put the bottom on equities as well. And let's turn on the AV WAPs. It's gonna be a lot of them, but we'll take it one at a time. The one from the last high sort of was resistance. We don't care about it anymore. To what we care about is this standard deviation threshold, which says at the moment that the bottom would be 410. But again, this is not uh, the most important thing right now. It will expand further, but if we were to tag this two standard deviation, or actually I think it's three standard deviation, yeah, it's three standard deviation uh, for the high AV WAP, we sure as hell get a reversal. Then all-time high one, we're getting to it, is 413. I think this is one of the more reliable potential levels where we bounce. The other one being the October low. Why I put more weight on the October low is because this is where this whole bullish move started. And being the origination point, I think it's likely that we will stop here. We can obviously overshoot a bit and go to like even below 410, but then we should see a strong bounce and continue rallying into the year end. Then we have the March low. We have lost that one as of yesterday, and the first one we recovered. The second one should act as resistance. So if you remember the Q3 thing, if we lose it again, this will either be this. We hit the Q4 open, which is also this AV up. We get rejected, and then we do the last leg down, and this one should take us to 410-ish. Like you also see the one standard deviation move versus this AV up here. So this is target if this would play out like this. Okay, then February high, we went below it. The ones I'm looking at are ETH yearly, which we are on right now. So we are on yearly AVWAP, but I think the most important one is October low. So it's a combination between the October low and the all-time high. They are almost at the same level. This is where I'm looking to see the drop uh, end. And of course, this means this doesn't mean they cannot overshoot. Like it could do something like this backtest, go here, bounce a bit, go lower, and then do this. Hide everything. Okay. Uh, so let's draw it out. The quarterly. Horizontal levels. We need some horizontal levels. Let's see if the June levels are still relevant. I think they are. So we have this 416 level. This is a this is a big one. So assuming we don't go that much lower, this would kind of be, if this is the low, and there's a good possibility it's the low, then the playout would kind of be gap down on Monday. Let's see how big the gap down would be. 1.4, 1.5. This looks pretty solid. And just for fun, let's make it a bit overshooty. So like 1.7, we go to, let's go to the AVWAPs. And we want the October low one. So let's say we gap down on Monday to the October low. It's going to be a bit higher than 412.38, so let's say 412.5. It's a 2% gap down. I'm trying to make it. So 2% gap down here, and we bounce on Monday. So this is scenario one. On Monday we gap down, and still on Monday we bounce and probably close. This should close green. So we go to 413-ish, 412-ish, between 412 and 413, and we close the day above 420. This is very important. So if you see the gap down on Monday, this should be it. Also be aware that it could be a gap down and go, like it drops even further. Maybe we go to 410, 410-ish like this, and then we bounce. So keep an eye on the open. VIX should be telling, like we are over VIX right now, meaning VIX went higher than Gamma went. Look at Gamma. Gamma is realized volatility. So this speaks of uh, a vol crush coming in very very soon. So on Monday, if we see a gap down uh, and VIX isn't like plus 10%, this is a clear sign that we will get a bullish reversal in hours. Same thing, even if we push further, like let's say we have VIX at 5%. 5% is nothing. We see like let's say VIX 2-3% on open and gap down to 415, and then it only gets to 5% while we push down lower to 410, let's say. This is a clear sign we will get a reversal. Don't believe VIX, like VIX should spike like 10-15% on a move like this. If we are like 421 and gap down 2.5% on Monday, VIX should be like plus 15 if it has continuation. If VIX is at like anything below 5% or around 5%, this is a sign that we will get a reversal, and this is the likely scenario we are in. So let's draw something out. And we call this scenario 1. Scenario 1, we gap down on Monday, we move higher and close above 420. So Monday should be a big push down and a close above 420. Then we could potentially see a pullback. So if you remember the play out here, I think, I don't remember what it, but like basically we go down, we back test the 50% level of the candle, and then we keep going up. So on Tuesday we back test, we go to 50% of the candle, which would be around here like 416, and then we start going up, and we keep going up, and the Q4 open is a good target, uh, and I think we get above it, turn it into support, and keep going higher. So something like this. This is not for next week entirely. It could take a week or two for this to happen. But if we get this bullish bounce and the continuation up, I think we will be above 430 by end of the week. So this is scenario 1, in which we gap down on Monday. It's a clear possibility if yields spike again. We don't know what's going to happen over the weekend. Maybe Israel goes into Gaza and gives us another reason for the market to continue dropping. So it's a clear possibility. Because it's both macro and technicals and positioning, it's a bit complicated to predict it. We have to be prepared for various levels. So this is the buy the dip level. We gap down on Monday. It can go as low as 410. Uh, Watch VIX. If VIX isn't above, I don't know, 10% while this is happening, this is a clear, this is a sign that it's a buy. If VIX isn't above 5%, it's a screaming buy. So that's it. Okay, so this is scenario 1, and I will hide it for now. Another scenario is nothing happens over the weekend basically, and we get a bullish Monday. Like I said, we are over VIX, so we have a lot of room for a VIX crush and get this kind of day like we did. No, this kind of day like we did on Monday. No, the fuck, this kind of day plus 1%. So this would be backtest of the Q4 open. Here we successfully recapture it. This one, it's unlikely that we will recapture it. So if you want to go short, the short entry is the backtest of Q4 open. And uh, this could break down, this could fail to break down. The Q4 low is the level. If we you can short here, then we go back down to the Q4 open with a high degree of certainty, like entry is 426, let's say, and we ride it back to 420. Uh, if this holds, we could have a bottoming thing around here. We do a couple more swings, like one or two max, and then maybe we go up, maybe we break down. I don't know, but I will talk about the breakdown scenario because I think this is the more likely one. So we do this, and then we break down, and then it's very similar to the previous scenario in which we go to this AVWAP here, maybe overshoot a bit, and then maybe we see a bounce, go back to this level where the breakdown happened, the previous Q4 low, maybe do this again and retest, and then start going up. Sorry. In this scenario, I think we end the week above 420, maybe 425-ish, something like this, maybe at the Q4 open. So this is the slow bleed version. The first one was the exhaustion drop. This is basically capitulation. That was a capitulation drop, the first scenario in which we gap up and continue going down a bit and then reverse. That's a capitulation drop. Uh, people get squeezed, no squeezed. People get to be for sellers a bit. Deep buyers step in because they like the price at 410, and then we keep going up because momentum. This is the slow bleed. This is the reluctant drop type of move that we have had this week as well. Like these are control drops, minus 1.3, minus zero point 0.8, minus 123. So we don't get that big minus 2, minus 3 day, even regardless of where it closes. We need to have like a minus 2.5, minus 3 day for the capitulation to happen, and then for this to be a good buy. Like this is the minimum we need. Like this, minus 2.5, let's say. So we need this kind of drop to happen, like in the first scenario, to for this to be a good buy. This is the slow bleed kind of drop. We should see more consolidation around the bottom. This shouldn't be a V reversal, although it can have a V reversal component, meaning it's like this is 411, and we go from 411 to 420. This could be a single day, but this is still more like consolidation around this 420 410 area. So in this scenario, I don't think we see a V reversal. I think we consolidate, more likely than not consolidate between 410 and 420 the entire week, and potentially maybe go higher at the end of the week and do like at max the Q4 open at 426. So scenario 1 and scenario 2. Let me show you guys the some other things. So first of all, SPY. No, this is the yield curve. So yield curve, uptrend, this is 2 year over 10 year, the ratio. We are almost back below 1, meaning we are almost an inverting, and this is the inversion thing. The low was, what was the low? 107, 108 even. And now we are back to 0.14. Yeah, yesterday was 0.14. So the 10 year and 2 year are uninverting. This is historically when the market hits its low. Like the market has a tantrum after the yield curve uninverts, the 10 and 2, and then that's when the low will make. Not when the uninversion happens, but in the interval like 3-4 months after, in the interval after the inversion happen, in the next 3 or 4 months, the market lows will come in, and that's when the market tantrum comes in. So maybe we get it this time. I don't think we get it like next week, in the next couple of weeks, but uh, January is going to be a good moment where it happens. So it will either be in the next month. I don't think that's likely, or is going to be in January, February, uh, the market tantrum. Either way, if the tantrum happens in the next month or so, it will last until year end, and the reversal will happen in January. If the market becomes bullish uh, in the next month, it will go up until the end of the year, and the market tantrum will happen in January. Then we have 10-year 3 months. The low was 189, and we are at 0.65, so we're going towards an inversion as well. The 30-year, 5-year uninversion happened already. Then we have price deviation. So we are quite overextended on the daily move. Basically, if we drop any further, this is the current price minus price 5 days ago as a percentage. So, for example, come on, I cannot click it. Do the one. Oh man. Okay. So on the 20th, compared to 5 market days ago, we are minus 341%. And as you can see, this is kind of the level where we start going up again. Um, Another like 2% down on Monday will make this a clear buy. This is the same thing but minus 10 days ago. Same thing 20 days ago. Same thing 30 days ago. Same thing 60 days ago. And the 60 days ago one is important because we are getting close to the point where it's also buy. Like we are minus 7% compared to 60 days ago, and this is minus 10, minus 12 is around the level where we reverse. So I would expect this will go to minus 10, and then we get a bounce. 90 days ago, same kind of thing. We have moved into negative values. We're close to a buy point. Then delta charts. Okay, we look at SPY positioning rating. This is 17%. Uh, if we drop below 410, we would be like 2-3%. We would be like close to this. So a brief move above 410 is a screaming buy. It's gonna be scary, but the dip has to be bought. Qs. We are at 22. What's the price? I don't remember. 354. I don't remember exactly what the buy point is, but if this drops, still a buy. Probably like 340. So Qs has a lot more to drop than other things. 340 will probably put us like below 10%, 5%. IWM is already at the bottom. Below 165 is 0. So we would make a cycle low. And I think it's a buy. DIA is at 23%. And going below 290 is probably close 0.5%. Okay. Now the bearish scenario is like this. The concerning thing is still mega caps. And we had Tesla with the breakdown. My instincts were right about there is no fucking way this breaks out. And we had the breakdown. Now, this is where it becomes complicated. We are on a support level. Like, let's say the lowest it can go is 200, like psychological level. I'll put this as manually at 200. Let's make this the most important level. So Tesla will probably go to if we gap down on Monday, we'll probably go to 200, but then it bounces. The important thing for the year-end rally is that it will not break above this trend line, and I mean this one here. Tesla cannot go above this trend line. This is it. So this is the cap for any year-end rally. On the other hand, we had Netflix with the surprising beat and the plus, I don't know, 16% move up. Where is Netflix now? At this trend line. Same kind of logic applies. It should not be able to break above this trend line. And another important factor for Netflix is that it had already broken down. Netflix went up from a low, not from a high. Like Tesla would have had to go up from a relative high, let's say. So Netflix, even though it beat and it was a surprise beat and it went up, it still will face resistance in this 415 area, and it went up from a low. My problem with mega caps, and I will start with Google and Microsoft because if you remember, I think Google is a short, is that they are very close to a high. And we have Google, Microsoft, Meta, I think, I don't know for sure. Meta, yes, Meta and Amazon with earnings next week. And these things are priced to perfection. Like, there is no fucking way they get a positive earnings reaction. They would have to actually surprise positively, but they are at the highs. Google is at least. Microsoft is very close to the highs. Meta is at the highs, and Amazon looks more like Netflix, so it might surprise positively. We'll see. But there is no fucking way these things go up in a sustained way. Like, I don't know what the earnings move will be, but even if they move up, they, let's say there's a positive reaction to Google. Google goes to 144 and then it will crater because this is buyer exhaustion. But my point is they have to do extraordinary earnings because they're at highs. These are priced to perfection. They what kind of results and what kind of thing they can announce that won't be a disappointment compared to the expectation. Expectations are sky high. They are priced to get everything right. There is no way they get everything right. So expectation is that any any move up on earnings for Google, Microsoft, Meta, and Amazon is to be shorted. But the more likely scenario is that we will get disappointing, relatively speaking, earnings, and these things will correct, same as Tesla, same as Netflix did here, in anticipation and earnings for Netflix, but these things will do it after earnings. Because let's say you rode this thing up to the near all-time high again, and you hold through earnings, and then it doesn't seem that bullish, you might consider taking profit here. So any spike up is a profit take opportunity for anyone. These things will not break the higher resistance level and they will break down. So ideal shorts, because IV will go down, is post earnings if these things go up. But like I said, I think they will go down as well. If you choose to short before earnings, and it's probably a bad idea because you'll get IV crushed, but if you do, don't be that scared. If you have like 3 to 6 months of expiration on those things, most likely they will print regardless. So even in the bullish scenario for the earnings, we would get this kind of move. All of these things need to correct in the same way that Netflix did, in the same way that Tesla did, and all of them will do this. Apple doesn't have earnings next week, but I think it's close to a bottom. I don't think Apple will drop that much. Maybe the others drop the ball a lot, and then we can see a bigger drop. But another 7% max. That's not a lot. Okay. An interesting scenario though is what happens if we get the push down on Monday. Like this will drop as well. Let's say it goes to here, 130 for Google. I think if we get a drop on Monday, we do a type of double bottom move, like drop down, move up, and then we get another push down and go up because of earnings. But even though earnings reaction is likely going to be negative, uh, we should not make new lows because of earnings. And that will be another telling sign of bullishness to come because uh, market in a week period just after new lows, and then we have bad news, and and the bad news does not create new lows in the market. That's a telling sign of bullishness that the market is looking for any opportunity to go full crazy, full retard bull. So uh, this is kind of how I think it can happen if we get the gap down on Monday that sets the low in. And plus, on top of that, there are a lot of beat down names and everything in IWM that will carry the market. I don't expect the next move up to be mega cap driven. I think mega cap will show relative weakness and then everything will go up because it's super beat down. Okay, so back to mega caps. Uh, Apple, anything from 166 to all the way down, but I don't think it breaks down that much before earnings. Maybe on earnings. Nvidia is looking pretty bad. But this is a week off pattern, so head and shoulders first of all. Neckline is here. But before anything else, this might be a week off. We have first version, sorry, and this should play out like this if I am right. So we go up, down, 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 up, go above 500, maybe 530, then do this, and then break down. This is too much. Like it would be probably something like this. Down to here, like 290, just below 300, something like this. If it breaks down now, it is exactly this 314. But I don't think it will. I think it will be a buying opportunity uh, just below 400. Maybe it goes to 382. Like this is also a demand area. We shall see. Are there any semis next week? AMD, the first, so not next week. Qualcomm, TSM had it last week, I think. Yeah, not that great. But that doesn't look bearish at all. Like TSM looks something like this. Meaning it is bearish, but not uber bearish. AMD probably will make a lower high on 100 and then go up. Qualcomm earnings not next week, the week after that one. Holy shit, TXN. We tested the lows before earnings. They should bounce. And earnings next week, Tuesday. If it breaks down, this thing is not encouraging. Probably go here, 117. Marvel with the gap fill should bounce on 47. Okay. Ultra Clean Holdings close to a bounce, but if it fails to bounce, it goes to 12. ARM. No idea for ARM. This one should go to 220. Anyway, back to mega caps. So expectation for Google is still mainly this. We go down. The minimum should see is 130. I think it will go lower eventually. Like 115 would be a good buy point probably for Google. Amazon will see on earnings, but would not be surprised to see it go to 113, 110 here. This will still be bullish. Microsoft, I would like to see it go to 290. Yeah, this area here between 280 and 290 would be a very good, would be a good buy. And Meta, just like Google, I think Meta needs to drop a lot. I would like to see it at 250. I don't know what Meta could do to to show good earnings. Meaning not good earnings in the absolute sense, because they will have good earnings, meaning earnings that exceeds the market's expectation. Netflix should give back some of this, but maybe go to something like this, then give back, turn this into support, go up again, maybe like this, something like this, yeah. Okay. I won't talk about. I mean, I'll talk about some, and I think we're getting to the end game. This is a week off that will break down soon. This, and then we get the fucking breakdown. CL1, CL. I don't like the way oil looks at all. Like, this is a huge divergence here. Not necessarily, I mean, it lower high versus lower high, but the gap here is a lot. And even if it would go higher, it would probably just be something like this, maybe even lower, like this, and then it will turn down. So I think oil has kept, and it's time for a move down to 75, but more likely to 65. Think about it this way. We have gotten a anemic move. When did the oil war start? Let's say here. 10% move up with lower volume, descending volume, and in an extremely favorable context with a new war starting. And it's respecting this level here. And it's looking a lot like a lower high. Now it could turn back bullish, like do this, and we have something like this. Then it breaks out and maybe goes higher. Don't think that will happen. But the minimum we will get is a retest of this area. When this area is lost, then 75, If 75 is lost, then 65. And of course, all of this are decision points where we can go, sorry, we can go higher as well. Like if we get to 75, we can have another move up, go back to 85, do something like this. I'm down about 15% on the long-term TLT. Still a believer in it. I almost went all in on Thursday. Uh, I I am not going to do it because I want to have some portfolio in other stuff. But if we get a dip buy opportunity for the market, I'm going with that instead of TLT. But it's basically the same trade because TLT will go up at the same time as the market, and going with the market because of it will move faster than TLT, I believe. So that's kind of it. Okay, I think that's it for today. Have a good one. Good luck next week. Bye bye.